The path that leads to truth is littered with the bodies of the ignorant. Do not be ignorant. Seek the truth. How do you get rid of ignorance? You join us every day, 10 to 15 minutes, understanding, educating yourself. Ignorance doesn't mean you are stupid. It means you don't know. So how do you learn? You take all the online trainings we have. You listen every day. You practice trade. You use the trade worksheet, daily market worksheet, weekly market worksheet. Those will supercharge your training. Those 3 worksheets, they're available for free in your show notes. All of our training is free. If you want to get really involved and in-depth, then of course you can be a Patreon member and you get special training once a month with our monthly Q&A Patreon members next Wednesday, December 11. Our first, second, and third level Patreon members all get to participate in that monthly call-in. It will be 12:30 Eastern Standard Time. Emails will go out. If you aren't a Patreon member yet and want that special training, join us. Even more in-depth training. But we have lots of great stuff at the website. We're going to put out again parts 1, 2, and 3 of Options Made Simple, the Charting Wealth Way. We're going to get that out to you again. Again, you need to be a subscriber for free. Go to chartingwealth.com, sign up. Hadn't purchased our book, 13th Printing is available. Autographed copy ready to go out for you. See the link in the show notes. If you're overseas, email us, cw@chartingwealth.com. We'll send you a PayPal invoice. Let's jump into these charts. We see stocks up today. The S&P 500 up 0.90%. The Nasdaq 100 up 1.07%. Bonds, as they should be when stocks are up or down. Gold is down 1%. Bonds down 0.55%. Now, let's analyze what we learned this week. Look at where things are when they come to prices. And we're going to, on this weekly chart, let's use the prior week's candle, see if we can connect 3. Pretty good there, the latest 3. What do we see as far as price goes? We have a red open box spinning top, indecision. And again, that's a cautionary candle. It's not a solid red candle, but we can see a slowing in up movement after 1, 2, 3, 4, 5, 6, 7 weeks. With that weekly vertical crossover all the way back on the week ending the 1st of November. It has been a nice move up, but some slowdown. However, price percent oscillator still heading up. Derivative oscillator still gaining upward momentum. Keep that in mind as you back away. See what's really going on. What's the 2-day chart done? Well, it crossed over going down and looks like it's sitting right there on the red signal line. Is it going to cross back over? First day of the latest 2-day candle, an up candle. And the high, 315.31, the prior high, 315.48. So not quite as high as the prior high, but trying to get there. So pay attention. If you see this 2-day chart cross over going up, remember the weekly's already keyed. You can sure pull a practice trade at the close of that 2-day candle if indeed it crosses over going up when it closes on Friday afternoon around 3:55. Watch that for a practice trade. Practice trade that and learn from it. See what actually happens, okay? We want you to practice trade constantly. Doesn't cost you a thing to use virtual dollars and see how good you can get and what you can learn from this, because you're only going to learn by doing. And learn by doing when it doesn't cost you any money by practice trading. If you have an online platform that you can use, such as Thinkorswim or any of the others, great thing to do also. What do we see on that 4-hour chart? It crossed over. Doesn't look like it really crossed over in the morning. Looks like that happened in the afternoon. And again, up in the morning, up in the afternoon. We're going to continue to watch that 2-day chart. See how it settles out on Monday. Monday could be a down day and nothing could happen. But again, if on that 2-day chart on Monday things cross over, seriously consider, and again, all the charts, all the time, paying attention to all the indicators, what you see there. See if indeed you might have a jumping in point. You might not, but if you do, don't hesitate to practice trade that. Learn from it. You're not going to get rid of ignorance if you're not learning. And how do you learn? The best way to learn in charting is to practice trade constantly when there are trades. You can do experiments all the time too, but again, when you are really practice trading on something you believe in, I want you to be emotionally invested in that like it's real money. Don't make everything a an experience where you're just seeing if something works. When you believe in things, when you are investing in it emotionally, then it becomes much more real, a much better practice. Perfect practice makes perfect. Okay, we're going to leave the S&P 500, go to the Nasdaq 100, like I said, up over 1% today. How did the Nasdaq 100 finish off? We'll check it out. It also had a red open box spinning top. Price percent oscillator still heading up. Derivative oscillator has lost some energy, unlike the S&P. Go to the first day of the latest two-day candle. Not as close as the S&P is to crossing over going up, but again, just the first day. Pay attention. See what you see, what there is to learn from it. It has blown through the crossover going down trend line that just happened on the 5th. So pay attention to that, the 5th of December. Almost said November. Let's go to the 4-hour chart. We can see it crossed over going up in the afternoon also. Up in the morning, up again in the afternoon. Pay attention to those things. Learn what the charts are teaching you, what they are showing you. We do not guess, we do not forecast, we follow trends. That is a big, big difference than a lot of things a lot of people talk about. We don't look for anomalies in the market. We don't look for inefficiencies in order to do penny trades or little short chart trades and all. That's not what we do. We trend follow for tens of dollars, not pennies on the dollar. And again, we want you to practice trade and see how well that works. If you look where the weekly vertical crossover was at the last, around 193.80, back on the week ending the 25th of October, how high did we go? That was the 29th, the week of the 29th. It hit a high of $206.05. $206.05 from 193.80. That's a pretty good amount of up movement over the course of a mere 5 weeks. And again, that's the best of the best. I'm not saying you would have captured all of that. I'm just saying if you'd have captured any of that in there, wasn't it beautiful? And again, trend following is what it's all about. Price percent oscillator, weekly vertical crossovers, which we have pioneered here. That's our idea that we developed also. If you hadn't gotten that training over the past week with the horizontal bands for profit and loss bands, if you haven't taken that training, going to offer that again soon. You got to really follow every day because you want that great training. Let's go to 20-year bonds on the weekly chart. What do we see there? After 2 weeks of up movement, we see that we have a solid red spinning top. Again, more downward momentum there, but it did have quite a large wick on top. We see the price percent oscillator that was flat the prior week. It's now moving down. Derivative oscillator still losing downward momentum. So the weekly chart still in a confirmed down move. We go to the 2-day chart. It is in a confirmed up move, but heading down. We've got 5 days now of down movement, a strong down day on the first day of the latest 2-day candle on Friday, down 0.55%. See if we have a crossover going down. If we do, pay attention to that. You might have a jumping in point. There's a big down day on Monday, might give you an opportunity to jump into a down move there. So watch that. Might be able to play that. Remember, the inverse fund for you to practice trade is TBF. Why TBF? It's the single inverse fund. I'll punch that in, TBF. It is the ProShares short, which means it moves in the opposite direction. As the market was plunging on 20-year bonds, TBF was going up. That's what it does. We have a great training for you in today's show notes for subscribers for free at chartingwealth.com. Inverse funds, what to do when markets crash. It's what it's all about, friends. So again, pay attention. Pay attention. Okay, so that's where we are on the 2-day chart. Lastly, we'll look at the 4-hour chart. Down in the morning, down in the afternoon, price percent oscillator heading down. Derivative oscillator still losing some downward momentum. So again, we'll pay attention in particular. Put this in your notes, in your weekly, let's see, your weekly market worksheet. Look at that, pay attention, make sure that you mark not only where the weekly is, but in particular, make a note of following that 2-day chart over the course of this next week if you have a crossover for a potential jumping in point at the closing of a 2-day candle, particularly Monday, maybe again on Wednesday if it doesn't happen then. It may not happen at all. If it does, let the charts lead you. Lastly, we go to gold. Down the biggest for the day, 1.01%. How did gold end the week? Green spinning top, a solid green. So again, it's not an open box green spinning top, which we do see happen sometimes. Typically, I mean, again, the green open box candles are our strong up candles. We have a solid green, which again is a slowing down of the down movement. Price is just above that weekly trend line. However, price percent oscillator still going down at the same angle it was the prior week. Derivative oscillator losing a little bit of downward momentum. We go to the 2-day chart. Look at that. It tried to cross over. It did cross over, but we were telling you to watch and see what there was to see. Was it going to laminate and pull back through? What did it do? Getting really close. You know what you're going to need to do? Watch gold on Monday. See if indeed it crosses over. If that candle closes, it appears to be crossing over now, but remember, you don't have a candle until the candle's drawn. 2-day candle's not drawn until the end of the second day. So watch what happens on Monday. If at 3:55 things are crossing over, then you might want to pull the trigger on a practice trade, a down trade in gold, and you can learn some of the knowledge you garnered from our 3-part course on Options Made Simple, the Charting Wealth Way, to practice trade a put if that occurs. Something you might think about, my friends. So we're gonna leave the 2-day chart, go to the 4-hour, and of course it crossed over, going down on Friday afternoon, down in the morning, and about the same in the afternoon, sitting right there on that weekly down trend line. So again, we'll continue to watch, see what there is to see as these charts continue to lead us. So I really should not have, I have that readjusting my, okay, we're going to see if indeed we have a crossover going back down, bouncing off that red signal line at the close of the market on Monday. Folks, that's where we are as we end the day. If you want to get the paid version of freestockcharts.com, that's TC2000, that's this great platform that we use for charting. You can see the link in the show notes. You'll get $25 off if you follow the link we have there. And again, want to know more about Patreon membership? Follow the link in the show notes. If you want to buy the book, follow the link in the show notes. And also take that great training, Inverse Funds, what to do when markets crash. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.